Good afternoon, ladies and gentlemen. My name is Oindrila Das, and I welcome you back to this month's webinar on Ace Your Performance at Board Meetings. Before we begin, I request all of you to please put your devices on mute to avoid any background noises during the session. Kindly note that you may ask your questions during the Q&A session by writing down your questions in the chat or message panel of this platform. Conducting today's session is Mr. Amit Modi. I take immense pleasure in introducing him to you. Amit is an associate member of the Institute of Chartered Accountants of India and has been a rank holder in chartered accountancy. He is also a charter holder of the CFA Institute, USA. Amit plans a total post-qualification experience of 17 years in the finance and accounts domain. Prior to joining MyCFO, Amit was associated with Indian media conglomerate Z as General Manager, Finance and Accounts of their print media division, DNA. He has earlier handled multiple leadership roles at Tata AIA Life Insurance as Assistant Vice President, Finance and Accounts, and with Aon Global Insurance Services as Manager, Finance and Accounts. At the start of his career, he has done a stint with PwC and was part of the firm's team at Hindustan Unilever. In his current role, Amit has been actively involved with companies across ownership types, ranging from family-owned and managed businesses, private equity and venture capital-backed ventures, and companies run by technocrat promoters. Amit's expertise lies in managing investor relations, presenting the company's performance to the board, acting as sounding board to promoters, and leading and managing finance teams across the companies that he manages. Thank you, Amit, for conducting this session for us today. Over to you now.
So let's commence this. Right. So thank you, Oindrila, for the introduction. Good afternoon, everyone. Before we actually begin, let's set the context for this session as to what we would be covering and what we would not be covering. Okay, we're going to be talking about board meetings and related issues, not really from a general perspective, but from the perspective of a CFO. Okay, so typically it's the CEO who really leads the engagement at board meetings, right? And the CFO does the presentation of the financial performance, the results, compliance matters, internal audit issues, and everything that falls under the finance domain. And when we say CFO, we mean the head of the finance department by whatever name he or she is called. So it could be finance head, it could be finance director, finance controller, or the VP finance. Right? Essentially, this is a person who is considered the face of the finance function in front of the board and carries the primary responsibility for leading the finance section of the board meeting. In this session, we would not be going into the secretarial aspects or the company law requirement or SEBI requirements. That's not really the objective of this webinar. Right? So, and with regard to the content of today's session, we've tried to focus on those issues and those matters which were raised by many of you who are part of the audience today. So this has been done keeping in mind your input so that you can carry back the most out of this session. So this is how a CFO's life really looks like, right? So you always have multiple deliverables, juggling multiple timelines and priorities, and when you are barely managing to stay afloat, you're suddenly informed that there's a board meeting coming up, right? So not only you need to do everything else, but you also need to prepare for the board meeting. And to add to that, few days before the board meeting, you might get an unexpected email from one of the board members asking for an update on one of the pressing matters, right? So this is very normal. It happens all the time. So despite this, how does one really go about being well prepared for the board meeting is something that we are going to discuss today. Right. So what are some of the common issues that CFOs typically face? Right. So like I said, we have compiled this from the inputs that we've received from many of you. So a typical situation that you would face is that every board member has his or her favorite focus area, right? So you need to be aware about those, and during your preparation and your presentation, you need to be able to address all facets of the financial performance of the company and not just focus on like one or two of them. Okay, now so there's some humor there, but in reality, when bad news is broken in a board meeting, the humor actually vanishes, right? So breaking bad news to the board is always a very difficult situation, right? It could be anything. It could be something like fall in revenues or underachievement of targets, loss of market share, high losses, or it could be something more specific like a major deal that's gone bad, or an unfavorable tax assessment or a legal case, right? So invariably, when a bad news is broken, the board meeting, which you thought was going pretty well, begins to go in a completely different direction, and major portion of your allotted time gets spent in discussing around that same issue. So what we're going to see is how do you manage bad news better. Okay, now not all board meetings are action packed, right? So I'm sure many of you have attended really boring or really unproductive board meetings, right? So and board meeting typically turns boring due to very lengthy presentations, or lack of focus on the key matters, or lack of decisions being taken. So what does one do to keep the interest alive for the entire duration of the meeting and get the best out of the board meeting? So a related problem is sometimes too much time gets spent on one or two matters. In some board meetings, somebody does a good job in doing a time check, keeping time, but it's very common to encounter board meetings where which was originally planned for 3 hours and gets stretched to 6. Even your own allotted time for the CFO could stretch by hours. So how does one really ensure that board meetings are kept efficient? Now, here's a case where people are listening to whatever is being presented, but no decisions are being taken. Right? So, you as the CFO could be wanting the board to take certain decisions which impact your function, but at the end of the meeting, you go back with empty hands. So you decisions are not taken. Right? It's indecision. So, how do you as a CFO get what you want from the board and get those key decisions from the board? Board level conflicts are not unheard of. And a CFO's position is quite vulnerable sometimes to such conflicts, whether or not the conflict has got to do with you or not. There's always a risk of getting caught in the crossfire. So how does one insulate oneself, and how does one manage these conflicts really better? Okay, so this is like one stray question which is just out of the blue, which you never thought it's coming, and you do not have an answer, and you do not know how to handle it, right? So it happens all the time, and so let's see how we can handle such situations better. Well, accountants typically carry a certain perception, and like with everything else, perceptions sometimes rule over reality, right? So, what are typical perceptions that a CFO carries? And we'll go through some of these that have been listed here. So, a very typical case is where there's a perception that the CFO is more, an accountant who does not understand business too well, right? Or there could be a perception where the person is a very broad, 50,000 feet person without having an eye for the detail, right? Or conversely, it could be the other way around. It could be somebody who's lacking the big picture, too involved in micro aspects, but lacking the big picture, right? So some other common perceptions are somebody who always says yes but does not deliver, and somebody who always protests with a no, right? So so there are CFOs who work very hard, but do very little to work on the perception, especially when it comes to the board. So what do you do to manage the board's perception about yourself and about your team, right, in a better way? Essentially, it starts with building trust, and we'll see how we can do that better. Now, having seen some of these usual issues, let's look at what a CFO should do to put himself on a stronger wicket as far as the board is concerned. Okay, the first step, extremely important for new joining CFOs, but even existing CFOs who haven't really been able to spend time on knowing the board well. Doing this will help us work smarter and will relieve ourselves of a lot of work in the days leading to the board meeting. So, whom are you? Who are key stakeholders whom you're likely to encounter in the boardroom? So, starting from the box on the left. Okay, so founder promoters, right? So on startups, angel VC, private equity invested companies, the founder promoters are actually part of the board. Family run companies, you will have family members, who could be part of the board of directors. In a professional setup, you will have managing director or the CEO who's there. VC or PE invested companies, you will have representatives of the investors, of the private equity and venture capital investors who are there as part of the board meeting. For larger companies who have institutional stakeholding, there are institutional representatives on the board. For companies which belong to a larger group, so a group of companies and a smaller company within that, there will be representatives from the holding company. Right, and this is true even for subsidiaries of foreign companies. You will have a holdco representative there. Creditors, it's rare, but it's typically in case where companies been taken over in special situations by creditors, or there are private debt representatives where there's a clause in the agreement where there is a board seat for the private debt lenders, right? And finally, you have independent directors. These are typically domain experts, somebody who's expert in that field, subject matter experts like lawyers, consultants, CAs, or you have industry veterans sometimes. So for example, in an IT company, you could have somebody from Infosys, somebody, Nandan Nilekan is a director. Such an example, but you could have such veterans from the industry who could be directors on some of the boards, right? So these are people you are likely to encounter, and how do you know your board well, right? So your board members well, right? So just some of the things that you could do to understand and know your each board member well. So go through their experience and track record, okay, and understand which interest group the person represents, right? So which, like we saw in the earlier slide, as to does the person represent the investors or represents the holding company? So it's important to know the background of each of your board members and how long the person has been associated with the company. Now, as a CFO, it's useful to obtain inputs from the CEO with regard to each board member. So you'll get an idea as to how is the CEO's relationship with the board been, with the board member. What has been each board member's typical concerns, right? So the CEO will be in a position to update you regarding that. How has the company gained from its association with each board member in the past? One very useful source of information could be the minutes of past board meetings. So you can understand as to what's been the attendance of individual board members, like who board members who are more regular than the others. What are the typical matters that are raised by individual members, and have there been any dissenting or conflicting views that have been recorded as part of the minutes, right? So doing all this is good, but there's no substitute to one-on-one meetings with each board member, right? So how it helps you is it helps you understand their concern areas firsthand. It helps you understand what they like about the company and the team. It helps you understand what's the perception about the key departments, including your own department, right? What should be your areas of priority, and it gives you a chance to communicate to them your understanding of the business and your own role. And most important than all, it helps build the trust, which is very important in this kind of a relationship. And so as a smart CFO, you need to actually go beyond what you see, listen, and read, and try to fit these pieces together, okay, and understand how the board landscape looks like. Okay, so typically there is somebody who is a lead director, in every situation. Right? So who's that person? Which board member takes interest with regard to finance matters? It is always somebody who's leading the finance side of things, right? How is the relationship of the CEO with each board member? Does the CEO have the board's trust? So it's a rare situation, but sometimes it does happen that there's a lack of trust. Right? And are there any conflicts between the members of the board? So these important things will help you carve out your own strategy of engaging with the board and building trust for yourself. So every company has its own unwritten rules, okay, with regard to how the board meeting typically functions, right? So there are companies which have very formal board meetings, almost like a closed board meetings, and some situations you would have informal ones where you would have other people besides the board members who could come and present. Right, so some companies similarly have very structured board meetings where the agenda is frozen and it goes exactly by agenda, whereas in some cases the meetings are really a bit unstructured. So there are points that people can actually make, which is outside of agenda. So there's no very strict structure to the board meeting. Duration, so typically a board meeting could be anywhere between 1 hour to 3 hours, but at times it stretches, and so it's important for you to understand how long typically, what's the duration that typically board meeting lasts, depth, so again, very important how sometimes matters are discussed at a broad level, at a high level, but there could be matters that could at times the board members may want to go into a certain depth, right? In detail, certain detail, right? So okay, so it's important for the CFO to understand what's the kind of depth typically the board meetings go into. For new joining CFOs, these are important things to know. For existing CFOs who've been around with the company, they would have known this anyways through the experience of being having been through earlier board meetings. Right, so you've done your groundwork and now you know that there's a board meeting that's coming up. So let's see what you could do in terms of preparation. First thing you would want to do is to think of what should be covered, especially from a finance angle. So what is usually covered? So there are usual items like the quarter financial performance, compliance matters, etc. There could be special matters, which are always under the focus of the board. For example, if the company is facing, let's say, collection issues or there is an inventory pile-up, so there will always be these matters that have to be part of the board agenda, right? There could be meeting-specific agenda, like if it's a board meeting that's going to be adopting accounts, so there'll be the agenda around adoption of accounts, auditors' observations. There could be an internal audit findings that may want to be discussed. There could be an M&A transaction happening, so there could be some information with regard to that in the agenda. Next would be matters arising from the action points of the previous meeting. So in previous meetings, some action points are discussed. Those need to be covered. The CEO will have his own inputs with regard to what matters need to be covered. Any matter which a board member has specifically asked an update on, matter to be covered. Okay, and there could be special situations, right? There could be a situation like, let's say there's been a fraud in the organization. Okay, and these are matters which typically need to be flagged off to the board, right? So these need to be included. There could be a conflict of interest. Okay, there could be major legal or regulatory matters that might have come up recently, something to do with succession, let's say, matters related to fundraise are important matters, special matters which need to be part of the agenda. Okay, next would be to get started on preparing the board pack, and we'll see more of this in the later slides in this session as to what are some of the things that you need to keep in mind when preparing the board pack. It's absolutely essential to circulate the board pack in advance. Okay, the key here is that you don't want to have any surprises at the board meeting, and this is particularly true for bad news. Okay, so and how do you do this? So two things: one is circulate the pack in advance, and secondly, try to have, and you must have actually one-on-one meetings with each member of the board, and if not all members, at least with the key members of the board. Okay, these one-on-one meetings actually help in many ways. So it helps you obtain buy-in for critical matters. Okay, it helps you take inputs for necessary some kind of modification to the content and the flow of your presentation. It helps you to address the individual board members' focus area individually rather than getting it done in the board meeting. Breaking bad news early is always good. Okay, so there's no surprise at the board meeting, and it also helps to make the board member participate in the problem. Okay, so he could give you input, suggestions which you may want to use. You are able to diffuse potential conflict situation which you feel that could lead to a conflict situation at the board meeting. You could probably it helps you diffuse that, these one-on-one meetings. And what it does overall is to shift the action away from the board meeting to outside the board meeting, right? So this is very important. It also helps you establish a working relationship with the board members, and this is independent of the CEO, right? And it helps you build trust. Okay. And finally, of course, meeting the board members individually helps you get the best out of their experience. Okay, so in terms of preparation, of course, you have to, this is true for any presentation, not just a board presentation, right? So you need to prepare your talking points, time your presentation, be absolutely on top of numbers. Not knowing your numbers well could actually undo whatever preparation you've done. Okay, now let's look at some points, some pointers with regard to how could you actually go about preparing a good board pack. Good board pack focus on the right matters and circulated well in advance is like a perfect recipe for a good board meeting. Okay, I mean, is this effective, right? Okay, and if you're going to be presenting financial performance in the form of too many numbers, so this is a lot of numbers which actually make not much sense to the reader, right? And you're going to completely lose your audience. A few slides of the presentation, you will end up being faced with a lot of questions which maybe could have been presented better. Right, so the rule here is keep it concise. Okay, so focus on what really matters to the board members. Of course, revenues, margins matter, and if something else, so it really depends upon what really matters in each situation. But whatever really matters is something that could be the focus. Okay, and you can still have those detailed financial statements as part of your annexures, right? But as part of the presentation, focus on what really matters to the board. Better still, make it as visual and as graphical as possible. It makes a huge difference. Okay, and even better is to, rather than showing plain numbers or plain graphs, but it helps to have graphs plus a few short narratives so that you are making it easy for your audience to decipher the points that you're trying to make rather than leaving it to their interpretation. This is an effective way of actually telling the story behind the numbers that you're presenting. Okay, so you may want to show too many performance parameters or metrics, but keep the number of slides manageable, follow some rule of having around 10 to 15 slides at the most, not anything really more than that. Okay, and to do this, to keep the slides manageable, you can actually club 3 or 4 related parameters together and make it like a dashboard. Okay, so here we see sales and gross margins, EBITDA, things that are shown, together, right? And this is like another example. Of course, these are illustrative. So this talks about the balance sheet ratios and how they are moved over a period. So these are all illustrative, and as CFO, you would be in a good position to decide as to what parameters or performance metrics that you need to include as part of your deck. Okay, but these are just we're discussing some ways of how this can be presented better. Okay, which would be more effective to the board members. Never skip the exec summary. Okay, so put it right at the start of your slides. This is typically a 5 to 6 points which summarize the entire story. Okay, and this is kind of prepares your audience to so they know what they can expect in the coming slides. Okay, now some more tips with regard to preparing a board pack. Okay, so if you're stating a problem, also include a solution. Okay, this is true for any presentation, any presentation that you make, not just a board presentation. For the board presentation, try to keep the format as consistent as possible from one board meeting to another, so that because people are actually used to seeing things in a certain way. Changing it every time is going to be very tough for the people to understand what you're trying to present. Now, unless there are some special things to be covered, and unless there's an instruction to change the look and feel, but otherwise, try to keep the format very, very consistent. Make your your presentation forward looking rather than historical. So you would naturally have some slides talking about the past performance, but I think the focus, what the board members really want to know is the way forward. Okay, so you'll have your budgets and your forecasts for the next couple of quarters or the year that you're going to present, and include roadmaps or what are the pain points currently, and what's the roadmap to actually address those. This is something that must come out, okay, out in the CFO's address to the board. Having a balance between good and bad. So if things have been good, okay, it's also important to tell the board what's really not gone right. Okay, and conversely, if you have too many bad things to talk about, okay, it's also important to communicate what's good that has happened, right? So have a balance between the good and bad. Provide an update on the action items of the previous board meeting. So this really helps to build trust, give them a confidence that whatever is being agreed is being actioned upon. Universal rule: never fudge any facts or numbers. Needless to say, right? Distractions like spelling mistakes, grammar, etc. You want to avoid them. You want to create an impression of your board pack being done in a haste, right? So do a simple spell check on your deck before it really goes out. So you've now done your groundwork. You now have a good board pack which you've circulated and hopefully run it through the board members, got their inputs. By now, a large part of your work has been done. This is how a large part of your work gets done even before you enter the boardroom, right? This helps you be in better control of the situation, and it instills a very good degree of predictability on what's going to happen. A few things that you may want to take care. One is the synchronization with your CEO. So this is like two batsmen running between the wickets. So got to back each other up. At times if the CFO is not very conversant with the numbers. So you got to act as a backup. Balance your role as a business enabler and a conscience keeper. So you got to wear the hat of a pro business CFO as well, and also ensure that you have your checks and balances in place. You got to play a dual role and have a balance between that role, right? Adjust your altitude. What does this mean? Adjust your altitude. So like we spoke, in some board meetings, in certain situations, it is more like a broad level, big picture overview. Whereas there'll be situations uh, where you would actually want to get into detail, right? So it is important for you to be mentally prepared, okay, to be able to do that. It's like an eagle who's flying at a height with a big picture view, and also you have a magnifying glass in your hand so that you are able to drill into the details whenever needed. So you got to move, you got to be able to adjust that during the course of the board meeting. Okay, so we saw that there's this question that you don't have an answer to. Okay, so it's completely okay to say that you don't know, you're not aware. Say it in a nice way, and do actually get back if you promise to get back, right? Now the thing is, if you address most of the questions coming from the board, and then this one stray question which you do not have a ready answer is really okay, right? However, if most of the questions are being answered as I don't know, then there's a problem. Okay, but if you've done your preparation well, if you've done your groundwork, if you know your board well, if you have a good pre-meeting preparation, and you've done all that we've discussed, okay, it's unlikely that you would face a situation where you would not really have answers to the key matters that are going to be discussed, right? Okay, but if you do, okay, then I think you need to go back and see what you can do better to avoid a similar situation in the coming board meetings. Okay, so we've throughout the course of this session we've had points where we said helps, something that you do really helps build trust, which is the absolute key, right, for your role. Okay, so what are the things that you could do to actually build this trust? Okay, so few things. So one is always present an update on the action points of the previous meeting. Okay, if something has not been achieved, you could say that it's not been achieved, give your reasons and when it's going to be achieved. Saying that I don't know are difficult words to say, but it helps build trust. And again, like I said, you need to say we'll check and get back, and you must surely do that. If you have made a statement in the board meeting which later you realize that it's not correct, okay, it's important to go back, communicate and correct yourself. And similarly, you may have committed a timeline, okay, but you find yourself unable to adhere to that. Communicate in advance that there's going to be a delay, and give a revised time for closure. You actually don't have to say yes always, but when you do, you should make sure you deliver. Okay, and it's okay to say no, but it's not okay to say no all the time. Don't as far as giving updates to the board members, you don't have to and should not actually wait for the board meeting. It is very good to actually keep giving regular updates, right? Keep having these one-on-one meetings that we spoke about, even outside, even when you don't have a board meeting coming up. Good to always catch up on very important matters. Keep giving updates. Most importantly, you have to always, as CFO, demonstrate high degree of integrity and independence. Having a neutral stance is always the best without appearing to be aligned to any particular board member or the CEO. So this helps build overall trust. Just like you have pre-board meeting preparation, there are post-board meeting activities, and this in a way forms part of your pre-meeting preparations for the next board meeting, right? Okay, so what are these? So circulate the minutes, and besides circulating the secretarial minutes, it's also important to actually circulate action points. So all action points with responsibilities, timelines should be circulated. And also important to keep the board members, keep giving them an update as to when these action points, as in when these action points get fulfilled. Now there are, so what's a red flag? Okay, so a red flag is a situation that you need to be watchful about as a CFO. These are not necessarily board meeting specific, okay, but you get hints about the existence of these red flags either in a board meeting or during your discussions preceding a board meeting, or even in the usual scheme of things. Right? So red flags are situations like integrity issues in the organization. If there are major legal or regulatory non-compliances, or there's a non-executive board member who's wanting to influence appointment of any of the key MPs, right? So similarly, related party, so appointment of related parties in important positions, or awarding of contracts or so goods or services to related parties, which are not really arm's length, right? Resignation of in the recent past we've sort of come across sort of media reports about resignation of auditors. It's been a trend of late, right? So as CFO, you would be privy to the reasons behind such resignations, but these are very much red flags that you need to be careful about. Right? Other red flags could be a strained relationship between the CEO and the board, or frequent change in the CEO. Independent directors. Now, independent directors are getting more and more cautious with what's happening around. There's a lot of responsibility being placed on independent directors, right? So, any kind of resignation of independent directors is something that you need to be watchful about. And lastly, if there are persistent cash flow issues in the company, which questions the sustainability of the business, it's nothing to do with corporate governance, but generally, it's a red flag if there's a serious concern on the sustainability of the business. What do you do when with these red flags? Okay, so you got to be watchful and don't hesitate to discuss with someone you trust. Okay, so be the CEO or any of the board members, right? And in very extreme situations, when you believe that this impacts your ability to perform or it endangers your association with the company, do not hesitate to look for options outside the company, right? Especially integrity issues or where ethics are being compromised. We've seen a lot of cases where CFOs have faced inquiries, interrogations, even criminal proceedings, okay, for wrongdoings done by the company. Now, whether or not the CFO was complicit in such wrongdoings or not. So you would be much better off to actually disassociate yourself, at the earliest. Okay, so we are at the end of the session, and so next time when if you come out of a board meeting which you thought did not really go well, bear in mind that it does happen that way, and there's nothing to worry about. One board meeting does not affect you that much, but I hope some of what we've discussed today in this session would be useful, and this if you follow much of this, okay, you would surely come out acing your performance at your board meetings. Okay, so if there are any questions, we are happy to take those. Okay, so there was so we had one question. Okay, so in a situation where the question is in a situation where things are going smooth, okay, how does one get the board members to actually acknowledge the good work that is being done, right? Because typically the board members wouldn't be aware as to what's happening on a day-to-day basis, right? So how does one do that? So that's the question that we had. Okay, so the answer to that is so we've discussed a lot of those points during our discussion, but just to go back, like we said, very important to engage even other than board meetings on a one-on-one basis for the CFO. Keep giving updates. Okay, this is how you could keep the board members in the loop with regard to the good work that has been happening. Okay. So there's another question which is it's a similar question. Okay, so there is a question with regard to deadline for board meetings. So statutory law. So like I said at the start, we're not really covering the statutory, the compliance aspects of the board meeting, but I think under the Companies Act, you're required to have the board meeting once in 3 months, so every quarter. Okay, so that's the requirement. Okay, there's one question which is similar to what we had, the first one, which is so since the board members are not really involved in the day-to-day functioning of the company and the day-to-day matters, what is the way to really keep them updated on an ongoing basis? So, essentially, it is again what we discussed so far. It is got to do with engaging on a one-on-one basis, giving them regular updates about what is happening, giving updates with regard to the action points that have been agreed in the board meetings. Right. So this is the manner in which you would keep the board members informed and updated about what is happening and about your role as CFO, your department, as a finance department, whatever is happening in at your end. Okay, so we'll hang on for 2 minutes just to see if there are any more questions coming up. Okay, so we have. Okay, so there's this question on how does one deflect when asked a question on something that you don't know the answer to. I think we've discussed this. Okay, so just to address this question again, it is perfectly okay to say that. So it's important to actually think on the feet, right? So for a CFO, it is important to be able to think on your feet. So which means that to be able to answer, then and there, right? But it is also not a good practice to actually answer where you are not really confident of what you're saying is entirely correct, right? So it is always good to say that, to make that clear, to say that you're not fully aware and you need to check and get back. Now, like I said, if you have answered, if you have addressed most of the questions coming at you well, throughout your session at the board meeting, okay, and this one stray question which you are not able to fully address does not really matter much, right? But if there's everything coming your way which you're not confident about, and this becomes like a very common thing, then there's an issue there, because then you come across as somebody who's not really prepared, right? And somebody who's not really doesn't really have a great handle on things. You're not in control completely, right? So you want to avoid that situation. So all this that you do, so the pre-meeting preparation, running, sending the board back in advance, knowing what are the concerns of the board members. So these pre-meeting preparations would help you gauge what kind of questions are likely to come, right? So if you're thorough, if you've done your groundwork well, it is very unlikely that you would be faced with a situation where there are too many questions which you're not really prepared about. So I hope that kind of answers that question. Let's wind up here. Okay, we are holding on for a minute more. Okay, great. So we've kind of addressed the questions that we've received, and great to have everybody on this session. Okay, and hoping to have you all on our upcoming webinars as well. Thank you very much. Thanks a lot. Have a good day.